Hi everyone, this is Greg Kilpack. I am the trainer for the weekly options webinar here on thetradersplan.com, where we talk about different options trades and events going on in the marketplace. So this is me in a formal setting, nice formal business attire, and this is me in true form with my wife and son eating at one of those Brazilian restaurants where they bring the meats to your table and cut it up for you. Love those places. Okay, in the news, we've got Evergrande. CNBC says that Evergrande default is highly likely. Yeah, of course it is. Tell us something we don't know, right? We've been talking about Evergrande every week for at least a month. And yeah, it's going to be bad. It's going to blow up in China. And it's going to affect the Chinese market in 2022. They're absolutely going to default because there's no way they're going to come up with enough money to pay for their debts, their enormous $300 billion plus debt. There's no way they're going to pay for that without government intervention from China. Okay, it's not clear if the Chinese government is going to intervene on their behalf, but anyway, we'll see. It's definitely going to hurt the Chinese economy, that's for sure. But we're not sure if it's going to affect us, how much it's going to affect us here in the United States in our stock market. Let's see, if I could put it in some sort of picture format, how would I do that as far as what's going to happen in the Chinese economy and stock market next year? Yeah, I think that pretty well describes it all, what I think is going to happen in China next year. Because I've seen reports that the real estate market that Evergrande is in represents about a third of the Chinese economy. So if it goes down, it's going to have a huge effect on the Chinese economy. Okay, and if it starts to affect us and our money and our stock market, what should you do? Yeah, you should eject. Okay, so I think that pretty much sums up what I think's going on in China. We need to be very careful and watchful on that situation, which is why I bring it up every single week on this show. Okay, having said that, there's no real new news going on right now for Evergrande that I've seen. Okay, so I want to talk about anticipating trends in the marketplace. If you had known when the pandemic started, which probably most of us didn't know, but if you had known that we were going to isolate so much and that there would be government, orders to shut down and not to get together in groups larger than, so many people, then you would know that any business that requires people to get together are going to take a hit in their stocks. We could have seen that coming. If you recall, the cruise lines were catching the virus and getting stuck out in the bay early on in the pandemic. So you can see that Carnival Cruise Lines, this is their about 3-year chart, they took a hit early on in 2020. If we had only known in advance that we were going to isolate so much, we should have seen that coming. And when we saw the boats getting quarantined out in the waters and not letting their passengers off for like a month or something like that, we should have seen something like that coming. Unfortunately, I didn't see it, didn't catch this one. But we should have been able to see that the stock was going to crash. And if we didn't catch that, we should have known that it was going to overextend and crash way too low. And we could have started to buy it back when it was around $8, $9, $10 a share as it was starting to bounce back up. It has pretty much steadily climbed until a few weeks ago. Actually, a few months ago. I think these are weekly candles. So it topped out after the gap down. It topped out in 2021 around late May or early June at $31.52 per share. So, even if we had only bought it at $15 a share, we still could have doubled our money in 6 to 12 months. That's pretty good. We should have known that it was going to make a comeback as the vaccines came out and that they got overhit. It went down too low, oversold. What other companies required people to gather together? How about movie theaters? This is AMC movie theater. You can see early in the chart throughout 2019 that this stock was already in a downtrend. Of course, when the pandemic hit right here in 2020, they went from about $8.750 a share down to as low as $1.95. Ouch. That's, what is that? About a 75% drop in the stock. And it bounced around quite a bit after that, but as early as, early this year or late last year, we could have bought it again at about $2 a share, knowing that the vaccines were coming out and it was going to make a comeback. Now, I could have easily predicted from a price of $2 or $3 a share that it was going to bounce back up to between $7 and $10 a share. That would be a no-brainer. But what actually happened surprised the heck out of me. It went from a low of $2 a share to $72 a share. My gosh, that's unprecedented. I don't know why that happened. Based on how many people are still going to movie theaters right now, I've been to one movie in a year and a half, right? And I know that the movie theaters are still not packing as many people as they did in 2019. So to me, this is way overblown, way overbought, and it's due to come back down. But we could have at least predicted it go up between 10 and 15, something like that, from a low of 2 to 4. Okay. Bouncing off support 3 times, 1, 2, 3 times at least in the last, in 2020. Okay. Should have told us that the buyers were starting to load up down at those prices. And we should have been able to see that as the vaccines come out and things get better, that AMC would make a return. Okay. Even so, you don't want to bet the farm on that, but you could have made a reasonable bet on that and made a very good return. Okay. What other stocks didn't do well, or industries didn't do well during the pandemic? How about Macy's? Same sort of pattern. Took a hit in 2020. If we were really paying attention, we could have caught the beginning of that downtrend in February 2020. Let's see, it went down. It bounced around down low around $5 a share throughout 2020. And again, as we predicted, as the vaccine started to come into place, and we should have expected a return of many retail companies and restaurants, that they'd make a return and the stock price would go up. So on this trade, as it started to break out, I think I would have bought it around November of last year if I had seen it. Okay, I didn't. I should have. I didn't. But very nice trade. You could have bought it around $8, $9 a share. Now trading at $38 a share. Could have made 4 times your money in less than a year. Very nice. Okay. So the idea here is that when news comes out, there's always going to be someone who wins and always going to be somebody who loses. And as the environment, the situation changes and new news comes out, we can profit from that. Let's look at one more, another retail stock. Let's look at Nordstrom's. Again, exact same type of pattern. Took a hit in 2020. It's coming back. Now, today, or last night after the close, they announced earnings, and apparently it wasn't very good. So they're down big today, and that puts them on my watch list, actually, to see if this is going to follow through to the downside from here over the next few days, or if it's going to bounce back up. So I'm going to be watching and seeing what trend develops from here, and I might take a position on it. So let's take a closer look at this, actually. I'm looking at a big chart, 3-year chart. Let's look at a 4-month chart and see what's going on. Okay, it's down significantly. Wow, it's down from about 33 down to 23, 22. So we'll see what happens. It could trend up or down or sideways from here. Whatever happens, I want to consider jumping on that trend. Okay, so we talked about the past environment, how you can profit from it. Now let's talk about the current environment. We're in inflation. Who's going to make money and go up during inflation? Well, let's see. Let's take a look. One company that's probably going to do well because gold is doing well during inflation is a mining company, FreeportMcmoran. Let's go to a longer chart. Hold on a second. Let's go to an 8-month chart. That doesn't even significantly show the trend up, so let's go to an even longer chart. There we go. Okay, for the past about 2 years, commodities and miners are generally going up. At least FreeportMcmoran did. Why? Because the price of commodities are going up. Oil prices are going up. Gold, copper, silver, pretty much all of those are going up. Not because the value is going up, because they hold their value during inflation. Okay, so we're in an inflationary market. That's not going to go away. At the very least, I would expect FreeportMcmoran and other similar mining companies to hold their value or go up from here. If inflation subsides, that might change the picture, but it doesn't look like it is anytime soon. So mining companies could do very well. Let's see. Let's look at another gold company, Newmont Gold. I would expect to see something similar. And we have a similar uptrend in Newmont Gold. It's been going sideways for the last, what is that? Last year or so. Broke out a few months ago and then came back down. So again, Newmont going sideways, and as long as inflation is going on and they're able to continue mining well, we would expect that to go up. Here's gold prices. There it is. This is gold prices over the past, what is that, about 7 years. You can see, so the last 2 years, it's really made a jump from about $1,200 a share to as high as $2,000 a share. So that's a pretty big run up, and that is due to inflation. All right. Now, I want to show you something, a great place that I go to find trades. This is in Yahoo in their earnings calendar. You go to finance.yahoo.com/calendar. And when you do that, you click on earnings for today's date or the last couple days, and you find the most major company. It'll show every company in here. I don't look at all these little companies, but I'll look at bigger companies like Autodesk or Analog Devices or Agilent or Best Buy, Burlington. These are the stocks that I want to look at because I know that they're big enough to trade. I don't like trading penny stocks. They're too unpredictable. All right. So you've got these different companies, and some of these are making moves in response to earnings. So let's take a look at some of these. I just announced one that was on my radar. Let's look at another one. See if we can find something else. And again, let's go back to a smaller chart. Let's go to like an 8-month chart. Okay, big move down on earnings. I'm not sure why that is. Let's see. Best Buy was showing 9% earnings beat. So there must be some bad news for the stock to go down 12% today. I'd want to look into that. And again, if it starts to trend up or down from here, I want to jump on that trend and hope it follows through. If it reverses on me quickly, I'm going to exit quickly, and I might even jump on the trend going the other way. Okay. You got to be fast on your feet when you do these types of trades. Let's look at another stock that recently announced earnings, like Burlington. Burlington Stores, Burlington Coat Factory used to be called. They just announced earnings, and it's up a little bit. It's up a lot. It's up 7.5% today. So pretty good move. Let's see if this trend continues in the next couple days. If so, I might jump on it. We'll see. When you see these earnings releases, then you see a big spike up or down in the prices that can initiate a trend, a new trend. I don't know if it will, but I'm going to watch it over the next couple of days. If it looks like it's trending, I will tend to jump on a trade like that. Let's look at Zoom. The company, I'm using their software all the time. Okay, Zoom recently announced just an increase in earnings of 2%. Now, for a company that a year ago was growing by leaps and bounds, 2% obviously is a disappointing number, and the stock is reflecting that down today, 18%. I would think that a move like that would follow through to the downside because it's already been in a downtrend. But I want confirmation. I do not want to enter the trade today. I want to watch it for another at least half a day, see how it opens tomorrow. If it looks like it's going to trend down, then I'll jump in on a short position or buy a put, something like that, or I'll sell a call above it. But you got to be careful. You got to watch them closely because it could reverse. Sometimes they follow through and sometimes they reverse after a day or two. So this is an interesting one to put on our watch list. Zoom video. Let's look at Smuckers, jams and jellies. I like jams and jellies on my toast. And it looks like they did really well in their earnings release. They're up $7 a share, 5.69% this morning. So that's a pretty good move. Let's see what the long-term trend is on this baby. Let's go out a little bit further. Okay, looks like the overall trend is up and we just had a pullback. It looks like the uptrend is going to continue. So, interesting. Might jump in on this one. We'll see. Very, very interesting. Let's look at one more. Let's look at Dick's Sporting Goods. Dick's is in a long-term uptrend here. What's it doing today? Let's go to a smaller chart now. Go to an 8-month chart and a daily. Okay, looks like yesterday Dick's gapped down and it looks like it's starting to trend down. So I'm going to look at this one very closely, read up on the news of their earnings announcement, and this looks like a good candidate. Might consider selling it short here or buying a put on it. If you think a stock is going to continue to trend down, then buying a put is a good strategy. If you just want to do a longer term position, then selling short is the right strategy. If you're not sure it's going to follow through and you want a nice conservative income, then selling a call above today's price is the right strategy. Just briefly on that. So I think I would probably buy a put on this. I think it could trend down from here, but we'll see. So anyway, that's kind of what I'm looking at. And this show is a little bit about thinking about major trends in the marketplace and in the world and how to profit from that, as well as some of the stocks and options trades that we're looking at. Okay, so really that's about all I've got for today. Thank you for watching this video. And if you want more information about how you can join us and be a part of our trading education, go to thetradersplan.com. This is Greg Kilpack. Have a great week and good trading.